Good evening, everyone. Welcome to our MQTrader webinar on Ukraine and Russia war on how do we invest. I'm Grace, your host for today's event. I'm one of the MQTrader team, which is also the organizer for this webinar. So before we start, can I have a quick mic check? Can you type 1 in the chat box to let me know if you can hear me clearly? Thank you everyone for your response. Cheng Tian, Ju, Wong. Okay, so great. You can hear me clearly. Let me have a brief introduction to MQTrader first, especially to those who are new to us. So MQTrader stands for Malaysia Quantitative Trader Group. We are an independent trader group that uses quantitative methods to do our analysis in trading and stock trading. So we developed the MQTrader stock analysis tool, and we have made it available to all our MQ members for free. So how to become a MQTrader member? You can become our member by opening a trading account through MQET's LYH team. You can enjoy benefits of MQTrader sponsored package for free. So the sponsored package includes e-trade, analysis tool. You can also accumulate MQ points every time you trade with us with the trading account. And also you can join our MQ affiliate and also many more rewards available. So this is our latest update, which is the MQEtrade. From this e-trade screen, you can view up to 10 market depths, MQ trading signals, and many other information about each counter at a glance. So the e-trade also allows real-time live data. So do check out the link for more information. And this is how our MQTrader stock analysis tool looks like. On the screen, I use Hibiscus, which is an oil and gas counter in Malaysia. It is a daily chart. And also we've included, you can see that on the stock analysis system, we've included various trading strategies, which can compute buy and sell signals based on the strategies that you have chosen. So the example that I've used on the screen is EMA 5 crossover. Other than the e-trade and also analysis tool, you can also accumulate MQ points every time you trade. You can use these points to redeem rewards at our MQ marketplace and also MQdemy. So to start accumulating MQ points, you just need to link your trading account with your MQTrader account. Under the sponsor package, you can also join our MQ affiliate program, which you can accumulate MQ coins under this program. You just need to refer people to us and earn MQ coins every time your referral trades. The MQ coins can also be redeemed at our marketplace, MQdemy, and also even cash out. So you can scan the QR code here to know more information. So up to here, can I have a quick check for MQTrader members? Have you started to redeem your MQ points and MQ coins if you are also an affiliate? Can you let me know by typing yes or no in the chat box? If you have redeemed or not. Redeem, you can type yes, no, then maybe you haven't redeemed yet. Yeah, quite a no, still collecting enough, yeah. So you have checked out our MQ marketplace, Lamin. No, yes. Thank you for your response, everyone. Yeah, so for those who have already redeemed, congratulations on redeeming it. And you can continue to accumulate your MQ points and MQ coins to get more rewards. So for those who have not yet redeemed, do check out our MQ marketplace and also MQdemy by scanning the QR code here. You can redeem your preferred rewards with MQTrader through all these websites. So once again, these are the benefits with MQTrader sponsored package. And for today only, I want to highlight is that you can open a trading account through MQET's LYH team, and you can get an extra 500 MQ points. So do go to the link and submit your contact details to us if you're interested. And the respective team will guide you on the next step. And for those current MQTrader member, you can get a free 300 MQ points as check-in rewards for today's webinar. You just need to upload a screenshot in the post-webinar quiz to claim your rewards. So the quiz will be sent to your email shortly after the webinar ends. And I'll pause here briefly for you to take a screenshot before anyone forgot about it. So do take your screenshot now before you forgot about it. Okay. So we will have a mysterious gift by the end of the webinar. do stay tuned for it, because we are giving out gifts valued at around RM 29.90 to 249 ringgit today. So do stay tuned for it. So our webinar is live on Facebook and Zoom. Please feel free to share the live stream link with your friends and also family so that they can learn together. And we are sending out post-webinar recordings to all who have registered. Pause a minute. No audio. Can I just have a quick mic check again now? Those can hear me clearly, can you type 1? Okay, so I think it's one case only lah. CG Chu, maybe you need to log in and re-log in and see or refresh your screen. Okay, so we will be sending out post-webinar recordings to all who have registered. If you haven't registered yet, but you still want our post-webinar updates, do scan the QR code here to register now. And I'll pause here briefly for you to register now, if you haven't done so. And for those who haven't taken screenshot, you can take it now as well. Okay, sure. Go back to the Facebook Live. I will just very briefly, you can take a screenshot and save the video, save the picture of it. Okay, maybe you can take a screenshot, a quick one, so that I can move to my next slide as well. Okay, Zaina. Okay, so coming back to our topic today, as many of you know that the world has been just thrown into another crisis with Ukraine and Russia at war, started at around 24th of February. So many investors may want to know, is it just a localized war? Is the impact of to the rest of the world actually limited to parties that is directly involved only? Or are there any bigger issues at hand that we need to understand as well? And how do we invest in such a tumultuous times? So we will be laying out these issues plainly and we'll be discussing them in this webinar. We will also be discovering what stocks may potentially benefit from this crisis as well. And the speaker today, Mr. David Mok, he is someone with an interesting breadth of experience in the financial field. He is the head of investment and research in IPP Financial Advisors. He managed various portfolio strategies for different risk profiles. So the portfolio he managed in IPP Financial Advisors is over $1 billion US. It is our pleasure to have Mr. David sharing with us today. So with all these backgrounds, can I have a show of comments? How many of you are ready for Mr. David's sharing today? You can type ready or let's go on the chat box to let me know you're ready for it. Thank you for your response, Casey. You're the first one. Ready, yes. Okay, sure. Without further ado, since everyone is ready, I would like to invite Mr. David to share with us now. Mr. David, I'll pass the time to you.
Thank you, Grace. Thank you so much. Thank you so much for a wonderful and kind introduction. Hello, everybody. Welcome to MQETrade's teaching session today. Just a quick background for me. As I speak, I will be sharing my slides. So this is a running commentary while I do sharing my slide. Is that, first of all, can I just say that this is a collaboration between MQETrade and SGX Academy. So what they hope to do is that with this current crisis, we hope to bring some investment thinking process to share with you guys. I'm a bit hesitant when I pick up this one because all of us know what's going on right now, the news flow and everything. I suppose the thing that I can provide is the investment thinking behind this. Hopefully that you can benefit from this session today. Very quickly, there's a disclaimer, of course. The disclaimer is very simple. In other words, this today's talk is very much an education exercise. It's not an advisory exercise. Say that again. This is an investment exercise and not advisory. So whatever it is, sorry, there's education, right? So whatever it is, it's just an education. But that's being said, it doesn't take away your questions. If you have any questions of sorts, I hope that at least my input can help you make your own decision towards what you want to do after today. Just a quick background. I think I'll skip this because Grace have introduced me already. Basically, I teach at SGX as part of my part-time work. Not part-time, actually my volunteer time. Also, I help out at NUS, which is the National University of Singapore, for their stock pitch competition and so on and so forth. So those are things that I do. But let's go straight to it. Before I go straight, it's admin instructions. Is that I'll be speaking about 50 minutes, 45 to 50 minutes, and there'll be no stop, so we go straight all the way. And then there'll be Q&A about 10 minutes thereafter, 10 to 15 minutes thereafter. If you don't mind, we do a hard stop at 9:30 or 9:35. So many reasons. I think the organizers will be quite tired by then. And also, I release you all after, I think 1 hour is quite quite tough in terms of attention span. So with that bit of admin, let's start. Now, how did Ukraine-Russia crisis start this year? We know how it starts. Give me a second. I'm going to turn on something for in my room. Okay, so how did it start this year? Importantly, it started when President Putin said that he recognizes breakaway regions of Donetsk and Luhansk in the East Ukraine on 22nd of February. So it started then. I know, like I said, some of you have expected it. There were signs of it, but the real fear started 22nd of February. He actually took action. Of course, all of us who watched the geopolitical events, it seemed unlikely that one would invade, but he did. On 22nd, he sounded it, and 24th, he moved in, authorized a special operations, and Russian tanks just rolled in to Ukraine. It's good to know that he did after the Beijing Winter Olympics. It officially closed on 20th February, and 24th February, he rolled in. So he gave the Chinese President Xi Jinping some face in doing so. But it's actually very, very clear that he did it after the Beijing Olympics closed. So what's the crisis about? It's all about Ukraine wanting to align itself with the West. Of course, it has every right to do so. It wanted to join the EU, also wanted to join NATO. But see, the problem is that NATO, it's a military organization, and that struck the fears into Russia, and Russia does not want NATO at her doorstep. Now, with this, I think there are two sides to the story. For me, at least, I won't want to pick sides now, but all I want to tell you is what has affected the market, and that's what we are here to do, to figure out the practical side of it, the practical side of the impact, the practical side of the market reacting to the event. So there you go. You can see the Russian tank roll in on the 24th February. That's where I put an arrow roughly around there. You see, in general, the market pulled back. The market is affected. It went down. Of course, 1 month later, you can see the market recovered. But you can see, in general, all the markets are affected. Yeah? But interestingly, if you could see this, the gray color here, the one that the least affected, that's STI. It's so interesting, yeah? That is Singapore Stock Index, Straits Times Index. Okay, so what I show you was the month to date. Now, this is the year to date. The year to date, at least in general, you can see we should have better performing stock index, or at least the country stocks. Again, the gray line, surprising, it's STI, which is the Straits Times Index. So it's done interestingly well in spite of all the other indexes pulling back on news of the attack. So it's very interesting, isn't it? So that said, market fell across the board as investors grapple with the Ukraine crisis. So we all know that the crisis is right in front of our face, but there's also another factor that's affecting the market. That is, the market was at that time fearing the US Federal Reserve's tapering. US Federal Reserve, as you all know, it's the central bank arm of the US, and its actions does affect the economy in a very deep way. And they're fearing that, they were factoring that in itself. However, the Ukraine crisis really doubled on the fear and doubled on the panic, and then the market pulled back. It's good to know that a background that the market was also worrying about the US tapering. So this is the US tapering of asset purchases. Some of you would know already that the US not only use low interest rates to fight the pandemic, and monetary policy-wise, they also inject liquidity in the market through purchases of treasury bills, through purchases of mortgage-backed securities. So they do that, just inject liquidity to the system to make sure that there's no seizure in the financial market. So they've done well. But that said, they have to pull back. Inflation is there, and we started it. That's their program. As you can see the chart, how they pull back. And this month is a month that say, look, no more buying of the assets. So this is the thereafter, after you bought so much, night trailer, what are you going to do? So they have to think about what to do with the huge assets they have. So this is what they've said, is that they have indicated they will start cutting down the huge balance sheet that they have accumulated over this COVID 2 years, and then they will start to reduce it. There are two ways of reducing it. One is what we call a roll-off due to maturity. In other words, they don't have to sell. Initially they bought it, right? To cut it, they have to sell it back, or to roll it off. So the previous time they rolled it off instead of selling in the market. So that will at least give us an indication what they may do this time around. That's why I think they'll likely do that rather than sell in the market. To really instead of injecting liquidity, it's really pulling liquidity back. So I think they rather roll it off for gradual management of the liquidity in the market. But they only do this after it raised its overnight borrowing benchmark, which we all know it happened last week. So it's beginning, it's going to come. That said, we touched upon the interest rates. Again, we know last week they upped the interest rate by 25 basis points. A total of 6 more hikes are expected for the full year of 2022. It's important to know that because this gives the expectation, sets your mind as to how fast the central bank in the US is going to raise the rates and therefore affect valuation of stocks. 1, 2, also how it reins back the inflation that's flaring up in the US right now. So this is the FOMC dot plot. Maybe I'll explain a little bit. The FOMC, which is the US Federal Reserve, is so what they do is that they do publish their thinking process every quarter. And part of it, they're very transparent. They just publish that. And probably the most transparent central bank in the world. The rest of countries around the world, the central bank say something, but they don't want to be held accountable in terms of publishing their thinking process, but the US does it. So this is December 15th, not too long ago, a quarter ago. And it's interesting to note that in their mind at the time was only 3 basis points in terms of increasing it. Just 1 quarter, things changed. This is the latest. This is the March 16 dot plot. It has moved by 1 full percentage point over 1 quarter. Can you think about the immense pressure, immense information that have changed the minds of the committee members at the Federal Reserve? It's quite telling. Here I am showing another chart from the same PDF which they published. It's public. It's the shift in terms of how they feel about raising the interest rates. It's so important, right? Raising interest rates has everything to do with inflation in the US. And inflation in the US, I think you know, it's very high, it's rampant, it's over 7%. And it's not only happening in the US, we are affected as well. You and for those who are listening, those in Malaysia, listening in, you know, you are affected. Singapore as well, we are affected. Globally, are all affected by inflation. And it doesn't help that the war has exacerbated the situation, right? Energy prices have gone up. You'll see later the chart to over $100 per barrel. Right now, it pulled back a little bit, but still, it is 120 actually, hit 120. So actually quite severe in terms of energy prices. But the war itself also brought in another form of problems, right? Which have also shocked the supply chain issue and the supply chain issue and supply coming out of Ukraine and Russia and surrounding countries, thinking the war may spill over, have stopped exports of some of the primary products, and that has again exacerbated the crisis across the world. It's not easy place to be, especially when it comes to inflation. So the interest rates that you see, as I show you, is the cumulative happening from December until today that shifted the minds of the governors to say, hey, we got to catch up. We got to catch up to raise the interest rate to combat the inflation. But that said, it seemed to be trouble. But let's look at the economy. Let's look at US economy. The reason why I'm explaining about US economy is that US continues to be the largest economy in the world. Now, being the largest economy in the world today, I know some of us may say that China has caught up and all, but still today, you know, when the US sneezes, we all catch a cold over this side. We still do. Probably another 10 years time, China catches up. US may not be that dominant in terms of the economy, but today they're still the dominant economy of the world, and therefore we need to pay a little bit of attention to what's going on there because it percolates down to Asia. So this is what it is in terms of the US. You can see the unemployment rate is 3.8. It's actually very good rate. I'll show you a longitudinal chart thereafter. Then there's also the change in payroll and employment. It's doing very well. It's going up. Average hour earnings is also going up. These are good signs. Now, this is the CPI, inflation. That's the one you better worry about. Okay, so it's and a producer price index and also an import price index all show signs of inflation. Now, this is the unemployment. This is a good sign, by the way. And the reason why I paint you this picture is that I need you to think that, you know, inflation in its normal sense without the Ukraine intervention, if it happens by itself, inflation is a result of an economy doing well. Let me say that again. Inflation may not be all that bad. It is a result of something happening in the economy, and the economy is doing well. And when the economy is doing well, inflation kicks in. It's natural. Okay, so I hope we understand that. So it happens because something good, but basically inflation can be really bad if it's out of control. So what I said that inflation is a result of something good is what you see on the screen. Unemployment rate is doing very well. It's 3.8. It's close to pre-COVID levels, but it's certainly far better than 4%, which US is hoping to get since a GFC, which is global financial crisis, until 2018. Here's the payroll. You can see the pullback due to COVID, and it's coming back again. If you notice, for the sharp eye one, you can see the gray line just before COVID. Yes, US total payroll has not quite reached exactly pre-COVID, but it's within the range of the pre-COVID, the 1 year within future. So it's very close. US payroll is very, very close now. Okay, this is important. It tells you the purchasing power of US workers. Why am I telling you all these things? It's important. Like I said, if US economy continues to engine continues to run, it continues to purr, guess what? The rest of the world benefits from it because US ultimately is a net importer. We in Asia exports to it in general. If we don't export directly to it, we export to countries that produce goods that exports to it. And namely, we do business in Asia. We do business with China, and China manufacture things and sends to the US. Likewise, Japan as well. So a lot of us in the export-dependent economies, we look at the US as a source of progress and advancement and GDP growth for our own economy. CPI, that's the worrying part. It's inflation. Again, that is a result of a good performing economy. So you notice a slight dip here at COVID, but since then, my goodness, it really, really ran up. It's amazing. Okay, so this GDP growth is doing very well. For those who watch the US economy, you know this. It's so rich now that a lot of things I noticed quickly, as I was presenting, little bubbles come up in terms of comments. People talk about cryptocurrency, and guys, money is filtering to other areas besides the traditional instruments. It's happening because of excess liquidity. The US has got a lot of other avenues to invest now, not just the US, but they have the means to, which is so important, right? So that's why you see a lot of these, not just currency, but other things, other collectibles, you see prices going up. Okay, so you have to bear this in mind. What to do next? It's important to know that at the background, the US economy is still very strong. So question for us is now, how the Ukraine and Russian war, how does the Ukraine and Russian war affect the US economy? Good question, right? Some of you have already figured out already, some of you may not, but let's talk about it. Certainly the oil price, I talked about it, it shot right up, went past 120 and it pulled back to 100, but now it bounced up to 111. But that's 2 days ago, the share price. As I prepared the charts, I just snapshot it and put it in because I prepared this. We got to get this cleared. So this is as close I can get. So this is where it is. It has certain pullback, the fear a little bit gone, but I think we're getting used to the Russian war. We try to figure what's going on. Nonetheless, it's still a sharp rise. It still is affecting oil price. I think will percolate down, not only energy, right, to primary products, to agriculture. Every part of our economy experiences this pressure up in terms of inflation. US inflation itself 7.9. Wow, okay, I've drawn this all the way back to 2002. You can see it's all the way there. Okay, so it's quite amazing. Yeah. Okay, so moving on, we spoke a lot about US inflation. The thing is, the question now lies, how do you and I, in a good way, in an informed manner, invest today as we speak? Because the Russian war is still going on. What do we do? The energy prices are up, commodity prices are up. What do we do next? To do that, can I just suggest something that we do an exercise that help us individually make up our own mind what to do with our investment. Certainly, let's start with what is the likely outcome of the Ukraine and Russian war? What is the likely outcome of the Ukraine and Russian war? If I could help, let's do 3 scenarios. First of all, one is the best case that will happen. Second, base case. And finally, the worst case. So if we decide on which case, I think you all will know what to do. But we need to figure this out because it does affect, right? Because look at it. If it's the best case, then things will settle very quickly. And guess what? The oil price will come off, right? And then maybe the supply chain issue will be better. will not be that broken, not broken. It's very tight now in terms of supply chain. It's not as smooth as it is right now. There's some friction in it, and the friction causes prices to go up. And there's a base case, and there's a worst case. So what do we do? Let's go to the best case, right? Best case scenario, if you will, is a quick end to this war, with both sides agreeing to a ceasefire, all right? Maybe tomorrow, okay? The ceasefire will come, will have to come from both sides, right? Being able to find a solution to respective desires. I think we talk about desires of Ukraine, wanting to gravitate towards the West, and then Russia not feeling threatened by Ukraine's desire. So that's a best case. If you believe that's a best case, then I think you need to position your investment. If you believe in a base case, which is that the war is contained within Ukraine, you know, it can go beyond Ukraine borders. Russia, you have heard the Ukraine president saying that if there's no a peace agreement, it's going to be start of a third world war. I don't know where you heard about that, but he said it. Russia is likely to win in this base case, but at a huge cost, with endless ongoing insurgencies all over Ukraine. In other words, it's another Afghanistan again. Okay, so it's not a pretty picture for Russia or Ukraine itself, all the rest of the world. The sanctions imposed will not be lifted. So in other words, we have impacted the economy until the West sees Russia relinquish her control over Ukraine. So that's the base case. Russia giving up Ukraine is unlikely, and as such, the sanctions on Russia will be long and protracted, and Russia will retaliate. And one casualty will certainly be, as far as we are concerned, the economy of the world. The worst case is that the scenario of the all-out war, Russia and Europe. It's not just Ukraine, right? Europe. And of course, the US will pull in. Some commentators believe that Putin will not stop at Ukraine borders, but cross into other countries who had left the old Soviet Union and who are along the buffer zone of Russia and Western Europe. Such countries include Lithuania, Estonia, Latvia, and Moldova. The all-out war is likely to see Russia being pressured into using its nuclear arsenal, and should there be a resultant nuclear war, Europe will be a mess far greater than World War II. We all know that. So those are three scenarios. What do you think? This is the poll. If you could, quickly, if you could just guess, make a guess. It's good to see the poll. Let me, let's go on. I will not color your thoughts. By the way, I ran this poll before, just last week, last Thursday, I ran this poll. I'll tell you the result and you tell me your result, what you think. Again, please do not be affected by what's going on in terms of what other people think. It's your opinion, your view. And because it's your view, guess what? You're going to make decisions today. Tomorrow, you start trading, or not tonight, you start trading already based on what you know, based on how you feel, because there will be suggestions what you do depending on your idea of where the best or worst case or base case is. 66 of you answered. There are about 100 over of you. Please try. Let's try. Let's see this group of people gather together over the net. What do you all think as a community, MQTrader community? What do you think where the case will be? Very interesting. Some of you think best case. I'm going to give you another like 10 seconds. I think it's right in front of your screen. Just press yes or no. That's all. It'll be very interesting. Those who are using your touch screen can use your fingers. I think you can do that. 85. Let's catch 100. There's 139 of you. Once we cross 100, we'll close this poll. And it's good information for you taking away. Take away from tonight that the people listening to you with you what they think of the crisis. Okay. Give 10 seconds. Okay, I tell you what, I'm going to close now. We are not hitting 100, we're hit your 88 or 89. You go, 90. Oh, you're coming in already. Oh, great. 91, 92. Okay, quick. some more, it'll be good. If we cross 100, 93, good. Just a few more, we'll close this poll, and you'll largely inform us where the mood of where the community is today. 97. Okay, three more. Those who haven't voted, please help us out. Just a few more seconds. We're getting there. Last three. Can we get there? Okay, I tell you what, we'll stop shy of 100, but it's good. It's a good poll. Let's end the poll. Let's share the results. Interesting, isn't it? Let's see. About 30%, 29% of you say that it's a best case, you'll end tomorrow. Very optimistic. Half of you, or more than half of you, 55% of you, slightly more than half of you, say it's going to be long and protracted. But 16% said that it's going to be worst case. Okay, it's good. It's good that you know. And it's good that the market also absorbs this. Just to let you know, remember I told you I did a poll last week of the same thing. Last week, it was 80% base case, 10% best, and 10% worst. Say that again, 10% best, 10% worst, 80% base case. Appears from this is that people are more gravitating to a solution area. It's ending really. So after 1 week, it seems that it is ending soon. Yeah, I'm going to stop share this poll. I hope that the poll screen is out already. I'm going to move on. If it's not, please let me know. Okay, so that's the base case. Thank you so much as well. So at least you know how you all think out there as a group. So regardless of which case the outcome will be, it will be these three, right? Economic activity attributed to Russia and Ukraine will be subtracted from world growth. In other words, activity, not all of it, but the reduced activity will be subtracted from world growth. Just quick run through. These are the latest official figures of GDP published by the World Bank, 2020/2021, because depending how the data comes in, you'll see that Russia is about 1.95 or almost 2% of the share of the world GDP. US, 24%. China, 15%. So, like I said, as much as we think that, China is coming up, Asia is coming up, US continues to be the juggernaut of the economy, of economic growth in this world, and we need to pay attention and take heed. Now, should US, I think you all know, US is so insular, right? They look at themselves. If they don't care about the rest of the world, and if the economy continues to purr and move, guess what happens? Yes, economy continues to move forward, and you, Malaysia and Singapore, will benefit from it. Albeit the fallout of inflation, we'll get used to it. There will be supply chain adjustments. Of course, Ukraine and Russia will be affected, but South America will be ramping up its volume. US will be ramping up its volume. Those other countries that can produce goods, agricultural products, will be there to overcome the shock in terms of supply. So that said, it will be a slow journey back. Either way, as sanctions put in place will take years to unlock. Because, right, you imagine that I place sanction on you. Of course, you want to extract as much blood from Russia as much as possible. If you want to undo this sanction, so there'll be negotiations. It'll be tough. So if you're invested in Russia, I'm sorry, it's winter time for your investments. It'll be a long, long time before the world receives Russia again. It'll be very, very difficult. Unless, some conspiracy theory says that the elites in the Russia will unseat Putin, capture him or whatever, or assassinate him or whatever, then Russia will go back to the fold of the world. These are conspiracy theories. It may happen. We don't know. In war, anything can happen. Propaganda, both sides. We just say right now, on the Western world, at least in where we are, we only hear one side, which is the Western world propaganda, Western world news flow. I don't know about you. Not many people hear the Russian side. The closest thing to the Russian side is the Chinese messaging. So if you hear the Chinese messaging, at least you hear both sides and you can roughly know what's really going on. So otherwise, you may mainly hear what is will you poison yourself? So I said, I'll answer that later. It's a very interesting question. Anyway, so market will soak in the situation and the consequences of this crisis. So what I'm saying is that it's likelihood that that the market will respond in such a way to adjust and soak in the situation. Okay, that said, notwithstanding, there will be problems. What are problems? The problems is that, as in Singapore, one of our wise men, Taman, Shomuruganam, he's the DPM, is someone that Singaporeans have a lot of respect for. He said that will be a long storm of inflation, food shortages, so the world faces that. And he's not wrong. Food crisis, as a Reuters in March early this year said, food crisis grows as spiraling prices spark export bans. Okay, people are exporting bans. You can see Serbia export bans of wheat, corn, flour, and cooking oil. With Ukraine, a banned range of agricultural products. Palm oil saw in Malaysia and Indonesia as well. There's curbs set in for exports. Not Malaysia, but certainly Indonesia, export curbs set in. So fertilizers also curtails fertilizer output in Italy and France. All these things spark food crisis. So we got to brace for it if this war drags on. So again, market prices always tell the story. I always say, look at it with the market. You can't go wrong. Look at peak price. Okay, this is 18th March data. Every day it changes, but I like to draw attention to the year-to-date price of wheat, 35% up. Wow. Coffee went down, surprisingly interesting, right? Grains went up 26%. Corn went up 20.8%. Biofuels almost 20%. Soybeans almost 20%. Wow, look at that. Sugar, not so much. Cocoa, okay, that is good. So not all agricultural products went up. Certainly the staples went up. So I was telling another group last week is that thank goodness we're eating rice in Asia. Rice is still okay and hasn't got so much. But we eat a lot of wheat, I think you all know, in Asia as well. So we are affected, unfortunately. It's unfortunate. Okay, so, I was going to, sorry, I forgot to tell this. On the right-hand side, you see, I explained to you the export of Russia to Egypt, Turkey, Bangladesh, and all, and so on. Look at Ukraine. It exports to Indonesia wheat 15%. So 15% of Ukraine wheat goes to Indonesia. Very interesting, right? So that's one thing we need to watch. So in other words, Asia is very dependent on exports from Ukraine. If it stops, can you imagine the price squeeze that we feel in Asia? Okay, so thereafter, the market will oscillate its attention to inflation. In other words, what I'm saying is that once the Ukraine-Russia war drags on, it will fade. It will fade in our fear, it will fade in our concern. In its place, inflation, which is right in front of us, will come straight at us, which is in the interest rates as well. Okay, so I'm telling you all the bad news, right? Guys, I got to tell you some good news. I have to lie. You need to balance both sides here. Just like, and all news flow, you have to balance both sides. Listen to both, and then you make up your mind. So what's the good news? The good news is this. This is the Dow. I've used this chart to show you is a logarithmic chart. In other words, what it does is that visually, a 10% change today is equal to the visual 10% change in 100 years ago. Okay, so irrespective of the number, so it will not be skewed. As you can see, what does it look like? It looks like an inclined inclined line, inclined graph. It tilts upwards, it slants upwards, it's upward moving. It means, in other words, stock market will rise over a long period of time. I guess say it's over a long period of time, yeah? So, but what I'm just trying to tell you is that, can you see a sharp drop in the World War II? Here, right here, you can see my cursor, World War II. That is something you want to take note of. Even if it's a World War II, market will continue to rise, going forth and going up and up. So it is what I'm saying is that's a good news. Okay, the world will repair itself in spite of dire circumstances. So for those who got 20-year time horizon, good news for you. 10 years, also good news for you. Market will recover from where it is today. So what does it mean? It means opportunities, isn't it? There are opportunities. There are opportunities for us to consider. What are these opportunities to consider? Unfortunately, the war is on us. For those who predicted the war out there, 150 of you are listening in. One or two of them may have predicted this war. You took a risk off. Congratulations. Now you have to go back in. That's the time. You have to come back in now because market recovers. So that for those who have gone risk off, congratulations. For those who are stuck, unfortunately, we have to look beyond the war right now. The war upon us. We need to figure out what's our next step. But one thing it's good for us to know is that market is always 6 to 9 months ahead of us. In other words, what we see today, our market will not respond to what we see today. If it is dire and the market doesn't seem to respond to dire conditions, can I assure you is that because market is always 6 to 9 months ahead. Market brings in future expectations. That's the beauty of the market. I cannot express it much more than how I appreciate public exchanges, where it fuse together past performance, present situation, and future expectations all merge into one. So that's the beauty of it. So what can we do? What can we look? What are the things that we look beyond the war? Looking beyond the war, which means a rebound from the war. A rebound from the war, it fades. People no longer, it's no longer a matter of great concern. It's still a concern. It's no longer a great concern because people are getting over it. People are adjusted to it. The supply chain has adjusted to it. That means the price of our expensive stuff is slightly pulled back. But I think you all know once prices go up, they don't know when it can come down. It never comes down, it go up, right? Because of inflation. But that said, we have to look beyond the war. And one of the things, the few sectors you want to think about, again, is not an advice. I have to stress that again, it's not advice, it's an education. Is usually those who are affected a rebound. In this case, the two sectors that are severely affected by the war is the tech stocks as well as the banks. So you may think about it. It can rebound. For those who know, tech stocks, of course, bleak future means bleak, not bleak, a crisis, a fear that future income is not what is projected. And therefore, when they discount back to present value, it may not be as high as one thinks, and therefore tech stocks pull back. Likewise, banks, which is a different story. Banks' exposure to Russia, people are worried, it's impacted, it pulls back down. Right? So those are things you can buy those stocks on a rebound. Okay, so the other thing I told you about rise interest rate, we spoke about it. I have to tell you about it because it's one of the things that after looking beyond the war, it will affect your investments. Certainly the banks will be affected in terms of rise interest rates because they will benefit from it. Any rise interest rates, park your money in the banks. Certainly the war will be the ones that will benefit from a rise in interest rates. Yeah. So one idea for you, which is statistically evident, that banks do have benefit from rising interest. But unfortunately, rising interest rates have a negative impact for technology stocks. I think you all know when the interest rates goes up, which means the discounted value back to present value is not very good for technology stocks. So while tech stocks, there's a rebound from tech, so there's also a negative pressure down for tech stocks. But it seems that the plus is banks, right? Banks benefit from a rebound, banks benefit from the interest rates. So one of the ideas that you want to think about is DBS. Okay, DBS here in Singapore, it's a traumatic rebound. This is the latest I can grab, 21st March. Sorry, I can't get it any sooner. Like I said, I have to submit this for vetting. So it goes to 4 point, the area of 4, that's where crisis started and went down. Look at opportunity. If you missed DBS, it's a good opportunity to get into. The banks now, if you missed it, it's on a rebound now. And again, what's the problem? What pulled the banks down is because exposure to Russia. And you think that DBS don't have, then wow, it means it's an artificial pullback. It's a fear pullback. It's not fundamental pullback. So which means it's an opportunity. Likewise, if you feel the other banks, you will be in Singapore. Look at it, we bound very strongly already, right? We can realize that there's hardly any exposure in the Asian banks regards to what's happening in Russia or Russian assets. You can see all rebounding already, the three banks. And I must tell you that the three banks in Singapore are the strongest banks in Southeast Asia. So it's for those who are lower risk profile out there, I know there's a spectrum of you, one a higher risk, some are lower risk. Please respect everybody because that's how you feel. It's okay. The low risk banks, it's one of the things that you want to think about. And one of the things that you want to think about is Singapore banks, but also because of the currency. You know this, right? Over time, Sing currency is always appreciated against all currencies, not just ringgit, but all currency. Many reasons why I'm going to speak it very quickly is that the Singapore Central Bank, which is the MES, uses currency as a way to hedge off inflation. Said it again. Singapore Central Bank uses currency to mitigate inflation. It doesn't fully hold it back. It just mitigates. So by making Sing dollar appreciates against all currencies, and Malaysia is one of the currency that you appreciate against over time. So this one idea, of course, yeah, all the good news about the banks and so on and so forth. Okay, so the other thing you got to think about beyond the war is hey, something is going on. Malaysia is reopening. Singapore is reopening. It is an opportunity to get into stocks that has otherwise have not recovered from its pre-COVID levels. So of course you need to do your homework. The ones must survive. They have good, balance sheet and all. Please go look at it. I just listed a few that you want to think to look at, to think about. And if, for example, these are SATS, which is an airport ground handling company, but it's gone beyond that. Go and do your research. It's gone beyond that. It's actually a very interesting stock. As I guess, not recommendation. I'm stressing it's not recommendation. It's just educating you that there is opportunities and prices, and what opportunity prices is to look for a rebound. Okay, so that's where we are. SIA, another CDL. Again, what's CDL? It's just a hospitality. Again, why hospitality is where your tourism, your leisure comes in, and he has pulled back, I can see, because of a crisis, and again, opportunity. If you think that this is a worthwhile a bet you want to do, which is a reopening trade, we call them. Another reopening trade, Far East hospitality. Again, I listed all the reopening trades for you to consider. These are very, very interesting stuff to look at. So that's it. That's the other thing. And finally, just sort of do a cap off. Just a last slide is that we are in an era of inflation. No hiding. One way to hedge inflation is stocks. Stocks, it's one of the ways to hedge against inflation. Gold is another. I'm not too sure about gold. I'll tell you why later if you permit me, but certainly stocks. Property is another one. If you want to think about it, it's a one way to hedge against inflation. And so guess what? You guys are in the right place. If you believe inflation is here, and the only way, no matter what, many ways, one of many ways to hedge against inflation is stocks. You're in the right place. 150 of you, you're ahead of your peers in doing what you want to do in terms of securing your future and making sure that your cash means something 1 year down the road. I mean, values of the same value as values today. So good stuff. A good job tuning into MQTrader, and I just have to thank MQTrader for arranging this. It's so important this time that we really have to figure out what to do with our cash, because inflation is up right in our face, whether we like it or not. So time now is 9:19. It's about 10 minutes more for Q&A, which I'm going to stop share my screen now, and I will handle questions, and I hope I can answer the best I can. I'm sure I may not satisfy everybody, but I do my best. So let's go for question 1. Grace.
Yeah, so thank you, Mr. David, for the informative sharing. And also to all our viewers, thank you for staying through the sessions. So a gentle reminder, if you have any inquiries, please feel free to type out in the chat box so that because our Q&A session will be starting very soon. Let me just share my screen. Okay, so to know more about trading in Singapore, you can scan the QR code here to visit the link for more information. You can also join the SGX Invest Telegram channel to get the latest market insights in Singapore. You just need to search for SGX Invest in your Telegram app or scan the QR code here. And a quick reminder, if you want to open a trading account through MQET's LYH team, you can do so by scanning the QR code here or send us your contact details privately through the chat box. So those who sign up today will get an extra 500 MQ points when your account is opened successfully. And for current MQ members, remember to do the post-webinar quiz and submit a screenshot in it so that you can claim your 300 MQ points check-in rewards. If you haven't registered for this webinar and want to get our post-webinar updates, you can register now by scanning the QR code on the screen. We'll also be giving out mysterious gifts value around $29.90 and $249 right after our Q&A session. So do stay tuned for it. Okay, so we'll start our Q&A session now, Mr. David.
Sure, go ahead, Grace. You read me the first question?
Yeah, so the first question is from Kelly. She's asking, gold has always been a safe haven during inflation, but since Russia is also one of the largest producer of gold, is it still a good time to buy gold-related equity? I think you also mentioned just now in your webinar.
Okay, well, thank you for your question. Kelly, is it? Kelly's the, okay. Kelly, okay, I'm going to give a very long answer. I'm so sorry, but because I don't want to give you simple answers for gold, because gold is not as straightforward as one thing that in terms of inflation, you buy into it. You know, I think you know inflation is with, it's exacerbated now, so we see it. So yes, so gold is good at the moment, you know. But you know what? Inflation has been with us for the longest time. And gold price have gone up over a long period of time as well. But I don't know whether you recall, because once gold fell from $800 to $400 before it bounced up to 2,000 today. It is good to know that gold, the movement of gold price is not dependent on just inflation. The movement of gold price is also dependent on the few factors, right? Inflation is one of them. The other one is US dollar. If you map the price movement of gold and US dollar, it is surprisingly highly correlated. In other words, what it means is that if the US dollar goes up, guess what? The price of gold will be, it goes down, and vice versa. It's fascinating. You do that, you can see it. So it's not just because it's inflation, it's affected by US dollar as well. Of course, the other things are affected by the economy. Now, why am I saying that? If the economy is doing well and the stock market is doing well, guess where people are putting their money? The stock market, right? So stock market is the one to go up, and you realize that gold lags behind. So economy of the world is an important factor with regards to gold. You may want to think about that. The other thing, of course, lastly, is insurance. Of course, when times are good, buy gold, because when times are bad, that's where you take profit from it. So if I could help you, gold in some sense, it's a insurance to global crisis, but do take profit. Otherwise, the gold price will come back down when things are back in order. So I hope that helps. Of course, the last one is interest rate, has something to do with inflation. So there are many factors. I'm saying it's multi-factor affecting the price of gold. Last but not least, I'm going to leave you with what Warren Buffett said. Warren Buffett said that the gold doesn't produce anything, whereas a company does, and a company continues to the business concern, and it adds value. to your asset, which is when you buy buy share, that's your asset. And gold, there's no production. It's just how people see the value. And again, how people see the value is not just inflation as a factor; it's a multi-factor condition. So I hope that answers your question. Okay, Grace, second question.
Thanks for clearing the air. So the second question is from two persons. They're asking the similar question. So they're asking, it's from Fred and Jianfa, with the current war and potentially an escalation to more sanctions and also escalation of the war itself, how would you hedge towards your position in the stock market? Or even if either the war ends or if it escalates, either way, how would you position yourself?
So very good question. Very good question, because you guys have answered it. I don't know whether you all have seen your answers. Just now, 55% of you say it's going to be base case. And then you have got shy of 30% saying it's going to be best case. And then the remaining says it's going to be the worst case. Now, whichever position you are, is your feeling, is your decision, is how you will invest. So for those who say escalate, obviously you fall into the worst case scenario, right? If it's worst case scenario, what would you do? Obviously, you think the market will go down, and therefore it's good to take risk off. In other words, go cash. The reason why you go cash because and not into any bonds or anything is that you are worried that that the rising interest rates at the backdrop again. And remember, there are two things going on, and not just the war. The rising interest will reduce the open price, the traded price of a bond, and therefore your value will go down. You don't want to do that, right? So cash, and unfortunately, is the best for the moment. But you say, what about gold? Yes, gold. But my question to you is that, what if it doesn't go as bad? In other words, gold will go back to normal. I think you all know gold hit 2000 and came back to 2009. So would you want to take the risk? So there are a few parameters, but then cash seems to be the better bet if I were you. For those people who feel that the market, the war situation is going to get worse. In other words, it's going to be really, really bad. Hey, guess what? Your guys may be right. Don't think that the 55% or that 29% is right, because there is a probability that Putin will still remain in power, and Putin gets very angry, and he will be really, unleashing powerful weapons against the West. It can happen. So there's what we call possibility versus probability. So I leave it with you. Depending on where you are, you can invest accordingly. For example, those guys who do base case, you're actually positioning yourself to get out of the crisis. So in other words, if you have a longer time horizon, please invest now. Please get going now, because you do know that it won't go bad. It's going to be where it is. If it's where it is, we'll get adjust to it, and we'll get adjust to it. Guess what? Stock market will forget about it and move up. Just like forget about Afghanistan war, forget about Iraq war after a while, market will go back up. I hope I answered your question.
Yeah, I think it's clear enough. Yeah. So the third question is from Taylor. So the question is, do you think the sanctions imposed on Russia that has caused increased possibility of deglobalization worldwide as well?
Do you mind?
So I think it's more on isolation of countries. Countries getting more isolated. Oh,
good question. Who asked that?
Taylor.
Okay, you are very perceptive, because it's not isolation, but actually division of two worlds. So what you will notice is that, unfortunately, this is what's going to happen. You will see it sharpening the divide. The divide is the West as we know it. We are all in West, by the way. But the China-Russia side, there is a growing, separation. China is watching what the US is doing the West is doing to Russia. China is watching it. And one of the things they found out is that how the kind of sanctions they put on Russia, not just sanctions, the coercion on the businesses that in China to pull out. I think you'll know this. So what does it mean? So if China were to make a move on Taiwan, said it again, if China will make a move, they have to buttress themselves against all these things. And one of the things that affects me most, I thought was very scary, was that they use SWIFT. They stopped Russian banks from using SWIFT. SWIFT is actually the old telex. In other words, the transfer of money within the banks. It's supposed to be a neutral a network. But now it's no longer true, it's political, right? So what happens if China decides to be, Taiwan wants to be very funny and push China, and China get angry and goes down? Guess what will happen? They will stop China from transferring assets around. So what will they do? So I think that China will take time now to buttress itself from all these things. Certainly there'll be two worlds. And as China produces its own network of transferring of funds, we'll make sure that its economy is protected from McDonald's from pulling out from China. So in other words, they will make sure that they have China equivalent of McDonald's, they have China equivalent of Starbucks. So whatever the West wants to do, China is not very much affected. When they pull out of the country, it means employment, guys. It's no joke. For example, I'm serving Starbucks in Moscow, suddenly I have no job. And that hurts, So it's very scary what the US is doing, or the West is doing to Russia. So China was watching, and it's going to be two worlds. China is smart already, in its own place. Google is not in there, Facebook is not in there. They have their own, I think you all know, right? The WeChat and all this stuff. So they're very much insulated. They're smart. It's what we call business security. We used to have food security, military security. Now it's called business security now. So China will buttress it. So what you'll see is two worlds. How do we invest? Guess what? Let's invest in two worlds. So there's still money to be earned both sides, but we need to be a bit more nuanced when we get into these two worlds. I hope that helps.
Yeah, it's very informative. So the next question is from Saham123. So he asked, will the war speed up transition to more sustainable and renewable energies globally? If yes, do you know any counters in Singapore that will benefit from it?
Okay, a good question. Will we accelerate towards, of course, even without what's happening? No, actually, sorry, let me rephrase it. So sorry. What's happening in Ukraine and Russia actually decelerates it. What are we talking about? Yeah, I'm telling you, decelerates. In other words, they realize that, hey, we can't just jump into green energy very quickly without a gradual movement towards that. They're stuck. Oil prices go up. It hurts us. So now they're busy trying to get people to get the oil back on the stream and all. So what I'm saying is this: they realize they have gone too far in terms of moving to the green and not slowly invest enough for oil to produce. So they're all stuck now, right? So I know what I can't do now. So we're stuck. So instead of accelerating, actually it holds back and say, look, no, we better take care of our energy usage now first. Don't make us suffer so much. And then we progress to a green energy. And green energy, it's actually in the, green energy without help from the government, it's red. It's loss making. You're not going to make it. It's all this government help and all that is making all this green energy work. So where does the money from the government comes from? Interesting, right? From us, right? So at the end of the day, it's not so straightforward. If you can invest in green counters, I'm sure, but I would say you just watch the bottom line or the bottom line, just be a little bit careful to make sure that they can still get the subsidies from the government. Not all the time. It's that straightforward that any green issue is good. So if I could just ask you guys to be a bit careful with that. With regards to whether there are counters in Singapore, they're going towards green. Can I tell you that they are, but I'm hesitant to tell you for good reasons. And then after that, but other companies that are doing very well. They attribute themselves to be good green companies, because what they do, they go for when they build a building, they make sure it's sustainable, like Capital Land and Invest. Okay, they do that. So because they do that, they get projects, and also shareholders like it and they'll buy into it. So surprisingly, I'm not talking about real and the green guys, but those who are espouse themselves to be very high on ESG. You should invest in ESG rather than just on green, because ESG is it's one of those things that are very popular now, because the investors appears to want companies that looks after environment, looks after sustainability of the world, and have proper governance. So these are the things that you want to think about more so than green. And there are many companies that are benefiting from being a ESG compliant company. So I hope that helps you. I know I haven't answered fully your question. I apologize, but I want to tell you more about ESG than green.
Yeah, I think more and more analysts is also emphasizing on ESG rating also.
Yes.
Okay, so the next question is from, again, 3 similar questions. Basically, they're asking, under current situation and for long-term investment, is it advisable to go for maybe ETFs, or individual quality stocks are more important, or tech stock, or even commodities?
Good question. Yeah, this is very long. How to tell you? Okay, can you do my just do a 2-minute spill, and then I hope you all take wherever you can. Okay. First of all, it's not one or the other. You can have both. Okay, so like what I mean. Let me describe both to you, and then after you take back what you want, because it's a long talk. Actually, I got a couple of slides telling how you do it. First of all, ETFs. ETFs is passive investing. So passive is good. It's lovely. But again, the word is passive. In other words, if you don't have time, if you're very busy, which a lot of you are, you have your own job, you have be it a salaried job, or you're an entrepreneur who is listening in, you make more money as an entrepreneur than you invest in stocks. You don't even bother. You probably put it there just for passive. Yeah, that's it. That's for you. Passive. Those who don't want to spend too much time looking at it, yes, go ahead, ETFs. Like I say, why is it long? Because not all ETFs is upward slope. Please, not all ETFs are upward sloping. You got to be very, very careful. You got to look for ETFs that have got history, and within the index itself, it's got a very good pruning exercise. When I say pruning, means the good ones come in and the bad ones go out. But that's in itself an index, a mandate index, a mechanism in there. So you've got to be very careful. So as much as I love to tell you, it's so easy, go and buy ETF, and now why you go down, you can blame me. No, ETFs, by the way, a little trivia for you. There are more ETFs out there. Say that again. There are more ETFs out there than stocks. Shock. Yes, there are more ETFs out there than stocks. Okay, so look, be careful of which ETF you buy into. Make sure that it's got history, a good mechanism, and all. So that's your passiveness. Now, what I say about stocks, guess what? If those who go stock pickers, you will beat the passive guys. Yeah, I'm talking you. Those who can pick stocks, you will beat the passive guy for sure. Because stocks move up faster, and of course, if you take higher risk, whether it's high risk, that means higher return. For those guys who picked up on the onset of COVID, you go and buy your rubber gloves. Hey, you make tons of money. Of course, you need to get out now, don't get out too late. You should have gone out earlier anyway. You got out earlier, now you're happy, right? Then you go on the next idea, next a project you look into. So exciting, it gives a kind of excitement in what you do. So what I'm saying is this: you can have both together. The amount of money that you say, look, I don't think too much about it for my retirement. Yeah, go ahead, do your passive. But you need excitement. Humans are like that. You and I need excitement. We want to go to a coffee shop, or, tell your friends which one you buy and tell them how good it is, right? We do that. It's human, some fun. So have both if you can. You can't just go for one. You have a lot of time, please, have some fun. Yeah, it's fun. And good to tell people that you make good buys. Of course, you make some mistakes here and there, but I hope they're good buys. The good purchases, the one that go multi-baggers, will offset your the ones that you do not do too well. I hope I answer your question.
Yeah. Okay, so the last question. Did we just pass through so-called 10-year crisis as the 2020 Dow Jones didn't actually drop as much as 2008? It's from Junwee Wong.
Julie Wong, you are very observant. Yes, there's a 10-year thing. It is just statistical. And every year you will know past 10 years of those things, all different reasons why the market dropped. And market dropped at least 30%. That's what they're saying. 30%. So for you to say that it didn't quite drop, it's not true. Actually, it dropped 30%, 37% to be precise for Dow Jones. It dropped more than 30% in 2020. So it did, the 10-year thing did happen. So the 10-year thing refers in general to a drop of minus 30% or beyond, okay? Or close to that. Well, it was 1 year, it was 29%. So it does happen. Yes, we have gone through it. Yes, congratulations, you're right. And we have to wait for another 10 years before it happens. But like in most things, it's not always the case. In general, it's the case. So in general, it's okay for next 8 years. The ninth year, you gotta be careful already. You know, like I said, not everything is so precise, right? So it's roughly left and right 1 year. You know, you give a take lah. So you got from now on to there for like 30% drop. It's you can say you got a nice ride up based on the US index. Again, you notice the way I'm very careful. I always say that you based on US index and not on any other index because, like I said, watch your ETFs. Your ETFs is based on certain index. Watch the index. So I hope I've answered your question. So, Grace, over to you.
Okay, thank you. Thank you for the informative session. I believe all our viewers have learned a lot from you today as well. Okay, so for those who are interested in opening a trading account, remember to send us your contact details via the QR code or our chat box. The respective team will guide you on the next step after this. And remember, you can still register for the webinar if you want to get our post-webinar updates. You just need to scan the QR code here to register. And after the webinar ends, remember to do the post-webinar quiz and upload a screenshot into the quiz itself to claim your check-in rewards. So this concludes our webinar today. And once again, thank you, Mr. David, for sharing with us.
You're welcome. Thank you. Thank you for listening.
Okay, so to all our viewers, we'll be starting our mysterious gift session now. Before we start, let me explain to you how you can get your mysterious gifts today. Basically, I will ask questions to the floor. The questions and answers option will be shown on the screen. You just need to choose the correct answer. So to answer, you just need to type out the alphabet corresponding to the answer. Okay, type A, B, C, or D. And the first two people from Zoom and first person who answered from Facebook to the correct answer will win the mysterious gift. Okay, so first two person who answered correctly on Zoom and first person who answered correctly on Facebook. So we are giving out 8 gifts value, 8 gifts. We are giving out gifts value 249 ringgit to winners of the first 2 questions. And the remaining questions you will get gifts value around 29.90 ringgit. And I'll read out the winner's ID. So if you heard your ID being read out, please send us your contact details, including your name, mobile number, and email address via the private chat function in Zoom or Facebook so that we can arrange the gifts for you. And one thing to take note here is that if you won 1 gift before, you can still continue to participate. Just that if you win again, you'll pass the chance to the next person. So this is to make sure everyone gets a chance. And from our previous experience, you may want to get ready with your keyboard before I start with the first question, because people answer very fast. So on Facebook and Zoom, okay? Yeah, I see Lee saying that ready. Okay, good. Okay, keep your keyboard ready and I'll start the first question now. So the first question, what do you need to do to get the 300 MQ points check-in reward? A, B, C, or D? A is to send email to us or send message in live chat box or upload a screenshot in the quiz, or you don't need to do anything. Okay, so let's see on Facebook and Zoom. First, there will be 1%, 1 chance on Facebook and 2 chance on Zoom. A lot of you answered correctly. Thank you for listening through. So let me just see. From Facebook, is Soon On Chan. Remember to send us your contact details. Soon On Chan from Facebook. And the first 2 persons who won for Zoom is Chun Hong and CY. Again, remember to send us your name, your contact number, and email address. You can choose the private chat function on Zoom. And Facebook, you just use Messenger to message us with Dula. Okay, so the correct answer is C. Upload a screenshot in the post-webinar quiz. The post-webinar quiz will be sent to you right after this webinar. Okay, so for the winners, remember to send us your contact details. I'll wait here. I'll pause it a little while for them to do so. Okay, I hope the others are ready for the next question. Remember to keep your keyboard on. Okay, so the next question coming now. What referral program does MQTrader have? Remember, you can refer and get something. So A, refer and win program, B, MQ affiliate referral program, C, MQ Polo T referral program, and D, MQ Star referral program. Let's see who got it right. Remember the first 2 persons from Zoom and first one from Facebook. So the answer, I'll show you the correct answer first. Correct answer is MQ affiliate referral program. You can get MQ coins. You can accumulate MQ coins every time you referral trade with us. So you just refer people to us, and once their account is open, you will get points whenever they trade. There's no limit for the point. There's no expiry for the coins itself. You can use these coins to redeem rewards with us. So the first 2 persons who won from Zoom is one Zulkarnain, and the second is Elaine Ong. So for Facebook, it's Paul Wen-Shi. So for these 3 persons, remember to send us your contact details, your name, your phone number, and email address to us so that we can contact you on the gifts arrangement. Again, I'll pause here for a while for our winners to submit their details to us. You can use the private chat function. Okay, get ready for the rest of us. I'm going to show you the 3rd questions now. Okay, the 3rd one. When did Putin authorize special operations against Ukraine? Meaning that when does the war actually start? Okay, when? The answer is 24th of February. If you have heard clearly from the beginning of Mr. David's sharing, it's C, 24th of February. So 20th is the Olympic closing ceremony, Winter Olympic closing ceremony, and 22nd is when Putin actually recognizes the breakout region of Ukraine. So the answer is C. 24th of February is when he actually authorized the special operations against Ukraine. So the first person who answered correctly from Facebook is Victor Ao Yong. Remember to send us your, hold on. Yeah, so from Facebook is Victor Ao Yong. Remember to send us your contact details. And for Zoom is Chin Leong Tan and also Leon Ko. Remember to send us your contact details as well. I see people still answering. I'm not sure whether it's your line a bit lag. Okay, so keep your keyboard ready. We have 2 more questions to go. You can still have your chance. The 4th question: what happens when the Ukraine and Russia war started? Is it the global market fell, or only the Russia and Ukraine market fell, or only the US market fell, or only the European market fell? Which one is the correct answer? I believe all of you have been paying really good attention to our speaker today. So the correct answer is the global market fell. So all the markets fell during the war, when the war started. Okay, so for Facebook, the first person who got it correct is Inet. And for Zoom is Lim Che Hao and Lee. Remember to send us your contact details so that we can contact you on the gifts arrangement later on. Okay, from Facebook again, I'll mention your name. For Facebook is Inet, and for Zoom is Lim Che Hao. We'll give them a bit of time for them to send in their contact details to us. Eileen, I see you're always a bit late. Maybe you need to refresh your screen so that you can participate. You can take a chance on the 5th question. So the 5th and last question. What are the other reasons that the global market fell recently? Is it because there are more people in US lost their job? Or is it because Russia has a higher chance to win, or Ukraine has a higher chance to win? Or is it because the market is also factoring in the Fed's tapering? I see someone answer F. There's no F option here. Okay, so I think many of you got it correct. Let me show you the correct answer. It's D, because the market is actually factoring in the Fed's tapering effect. So the US is actually cutting down on their asset exposure also. And that's why the market actually fell, partly of the reason. So congratulations for Zoom. We have our winners, Ahmed and Acer. For Zoom, it's Ahmed and Acer. Please send us your contact details now as soon as possible so that we can contact you after this. For Facebook is Adi Hasrulizam Abdul Kadir. Adi Hasrulizam Abdul Kadir. Okay, again, to remember to send us your contact details so that we can arrange the gifts arrangement with you. So for winners who have not yet sent your contact details to us, remember to do so now, because you just need to send us your name, contact number, and also email address for us to contact you on the gifts arrangement later on. Okay, remember you can use the private chat function to send to hosts and panelists only so that others wouldn't be able to see it. While waiting for them to send their details, you're more than welcome to send us your inquiries regarding MQTrader in the chat box as well. I'm more than happy to help you with it. So just a gentle reminder, the winner let me just check if all our winners have sent in their details. Who is the winner for the last one? Shafiq, I'll just read out the name to you again. The last questions winner is Ahmed and Acer for Facebook. Ahmad and Acer. Okay, so remember to send us your contact details. You need to send us your contact details now before the webinar ends so that to ensure a smooth transition now, so that we can contact you right after the webinar for the gifts arrangement. Okay, remember you can send us your inquiries regarding MQTrader. I'm happy to answer here. Okay, so remember you can still register for the event. By scanning the QR code here, you can send us your contact details and register now so that you can get our post-webinar updates. Updates including our post-webinar quiz and also our recordings. So do register now so that you can get all these post-webinar updates. Just a pause here. I think Acer, if you are still around, remember to send us your contact details. Okay, for those who are interested in signing up or to open a trading account, you can do so by scanning the QR code here. By opening a trading account with our MQETs LYH team, you can get our sponsored package, MQTrader sponsored package for free. Page not found, Chin Leong. Hold on. Can you try again to scan the QR code? Or you can screenshot and save the link for your own reference later on. You can also find the link in our comment section actually. So again, do register for the webinar if you want to get our post-webinar updates. So our sponsored package also include our e-trade, our stock analysis tool, our MQ points accumulation. You can also get our MQ Polo T. And also you can join our MQ affiliate referral program. All these are actually free when you open a trading account through the link. So these are the sponsored package under us. This is how it works for our MQ points accumulation. Yeah, Chin Leong, so right above you, there's a link. The first link, register link. You can refer to that one also. Hold on. Okay, Chin Leong, our team, Jessie has actually sent the link. You can click into the link directly to register for the webinar to get our post-webinar updates. So for MQ points accumulation, I just want to emphasize again, once your trading account is open, you just need to link your trading account with your MQTrader account. Once you link successfully, you can start to accumulate points automatically from every trade you trade. So whenever you trade, you can earn points, which can be redeemed in our marketplace and also MQdemy. To check out our MQ marketplace, right, you can scan the QR code here to check out our MQ merchandise and also vouchers available for you to redeem. Vouchers which you can redeem is including Lazada voucher, KFC voucher, Aeon voucher, and etc. You can also redeem Starbucks voucher. So remember to follow and like our MQTrader social media if you want to get our latest updates. We will be organizing webinars at least once every month this year. So remember to like and follow our Instagram and Facebook so that you can get our updates. So if there are no further inquiries, we'll end the webinar today. And I'll just off my camera. The webinar will be live for a few more minutes so that you can refer to the links in the chat box before it is gone. So I wish all of you a fruitful week ahead. Stay safe. Thank you, everyone.
Thanks for watching.